What's going on, everybody? Welcome back to the channel. And in today's video, we're going to be talking about a really easy trading strategy that has a very high win rate that you can use to get into some really profitable trades. But before we get into it, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great tutorials or urgent market updates that we will be posting on the channel. So today, we're going to be talking about divergences. I'm going to pull up a graphic here so you guys can get a little bit of a visual aid, but a divergence is basically when you have price movement going in the opposite direction of your indicator. In this case, I'm going to be using market cipher B. But if you stick around to the end of the video, I'm going to be showing you guys how you can use a free indicator to do the exact same thing. I know not everybody has the money to pay for an indicator like market cipher, as great as it is. So I do like to give you guys free options in case you can't get market cipher. You can just use your free account on TradingView, use a free indicator, and get the same results. So without further ado, let's jump into the charts. I'm going to show you guys two types of divergences today. We're going to talk about bullish and bearish divergences. There are a few different types of divergences, but today we're just going to cover regular, bearish, and bullish divergences. I'm going to show you what they are, how you can spot them on the chart, and how you can use them to enter really profitable trades. And then right at the end of the video, I'm going to show you guys how you can use a free indicator to get the same exact results. Let's get into it. So we're going to start off with an example of a bullish divergence. Basically, what you're looking for with bullish divergences is you want to look for your blue momentum waves, in this case on market cipher B, to be heading in the upward direction, right? So you have a big wave here, and then you have a little wave here. So you want to be able to draw a diagonal line to the upside. So once you find that, you want to come up to your price, and you want to see price making a lower low. Right? So for bullish divergences, you're looking for price to be making a lower low. As you can see here, we have a low right here, and then we have a lower low over here. So this is what you want to see. You want to be able to draw a downward diagonal line on your price. So you have your upward diagonal line on your market cipher B and your downward diagonal line on your price. So low, lower low, you have a low on market cipher B and a higher low. So you're looking for a lower low on your price, and you're looking for a higher low on your indicator. So if you were to extend these lines all the way down, right, eventually they would touch. So you're looking for the downward line on your price and the upward line on your indicator, creating a pinch point. That's kind of how you can think about it, right? It comes down and it hits that pinch point, and eventually price will pop out. So you have line here, and as you can see, price came up. Now, how big was this move? You can measure it here. It was about 4%, right? With 10x leverage, that could have been 40% profit. So very, very, very powerful. Now, in some cases, as you can see here, you don't always need price to be making a lower low in order for the divergence to play out. You can just look at your market cipher B or your indicator and just look for momentum to be coming to the upside, right? So right here, you have momentum coming to the upside. If you come straight up with your mouse, you'll see we moved up. Also, right here, you have momentum coming to the upside. If you move your mouse up, boom, you get a move to the upside. However, if you do have both things playing out where you have your momentum coming up with your prices making lower lows, that will make it a more powerful move. So if we come back in time a little bit, you can see right here, we have another bullish divergence. So we can circle, let me grab my brush tool. Right here, if you come up, right on this green dot, or at the bottom of this big wave, you see you come up and there's a low, right? You make your low right here, and then your momentum is coming up. If you bring your mouse straight up, you make a lower low, right? So you have your line here, your line there, bullish divergence, and this actually played out quite a bit. You could have traded it up until this point for about 5% profit, 50% with leverage, or you could have rode it all the way up here for 13%, or you could have held it for a much larger move. But you could see, guys, these play out really, really well. Let's just see if we can scroll back here and find a little bit more. We are on the 1 hour time frame. Right here, you can see again, your momentum came up, right? If you bring your mouse straight up, we did have a move to the upside. If you measure that one out, 3% profit if you caught it from wick to wick. That's 30% profit with 10x leverage, right? So did we make a lower low here? Momentum is coming up. Let's go to the tip of our wave right here, move straight up and see. So you have a low right about here, and then you come to the tip of your other wave, come straight up, and you have a little bit of a lower low, not much, but a little bit. So you have that downward slant, this upward slant, come up, and then boom, price increased. So we could do this all day, guys. This plays out like crazy. And here you go again. Right here, you have momentum. You could really draw it from either one of these dots, but generally you have momentum coming up, right? And then you get this little trigger wave. If you come up with this, you get a move to the upside. That was roughly a 5%, 6% move, could have made 60%, 50% profit with 10x leverage. So right here's another example where you have momentum coming up, and then, boom, you came to the upside. That's a decent move. I'm not gonna measure out all of these guys, but that's an 8% profit, 80% profit with 10x leverage. So you could see these truly, truly play out. Like I said, if you do get those lower lows on price, as well as the higher lows on your indicator, the move will usually be larger, but it's not always necessary to have price making the lower low. Sometimes it does play out pretty well with just the momentum coming up on your indicator. So just keep that in mind if you're trading these. If you do want to go off just your indicator making a higher low, assuming price is going to go up, just know that it might not be as strong of a move if you're not getting an actual bullish divergence where price is making lower lows. So now let's take a look at bearish divergences. So with bearish divergences, the same rules apply, but they're flipped, right? So you're looking for price to be making higher highs while your indicator is making lower highs. So let's see if we could find an example. So we're still on the XRP 1 hour chart, and right here, you can see that we had a high right here, and then we had a lower high right here. However, if you come up to price, right? You want to go to the momentum wave, come straight up, and let's see if price made a higher high. As you can see, we did make a higher high. So in this case, instead of looking for the pinch point, you're looking for the lines to be going away from each other, making like an alligator mouth, right? This is a bearish divergence. So high, higher high, and then you have a high and a lower high. So you have momentum coming down as price is coming up, and that's what you call a bearish divergence. And as you can see, as soon as you got the peak of this wave, you came right down in price. So if you measure this out, this is a pretty decent move, right? 4%, that's 40% profit on one trade. It took 21 hours, so you're making 40% on your money in one day. Now, this is also, you can apply this strategy to any time frame, right? But as always, if you use this on the smaller time frames, the moves will not be as high in percentage gains. So let's come down to the 5 minute here, one of the lower time frames, and let's see if we could find a bearish divergence on the lower time frames. So again, we're looking for momentum waves to be making lower highs as price is making higher highs. So we're gonna come around here. We're looking at market cipher B. Okay, so here we have one right here. You have your price making a higher high as your momentum is making a lower low, and then boom, you could have caught that move. Now we are on the 5 minute chart, so like I said, the move is gonna be much smaller, 0.6%. Or about 0.7%. But hey, if you're using leverage, that could be a much bigger move, right? 10x leverage would give you 7% profit out of this move. So just to draw it out properly, let's go ahead and grab our trend line, right? We're gonna go from this red dot right here to this red dot right here, creating a downward diagonal line, right? So make sure you're on the same candle right on that red dot, and you wanna come straight up. You wanna go from this high, right, over to the next red dot, which would be right here. So you can see very clearly here that you have price making a higher high and then momentum making a lower high. And guys, you could just keep coming back, right? Like I said, if you do have price going one way and momentum going the other way, it is a bit of a stronger move, but you can just find these on the momentum waves and they do play out. They just don't play out as much most of the time. So right here, you have your momentum wave coming down, right? This is where you would take the trade. If you come up here, you can see that price did not make a higher high, right? We actually made a lower low, but still, if we zoom in just a little bit here and come right onto this red dot, it still would have played out. Like I said, a little bit of a smaller move because We don't have price going in the opposite direction, but you still could have caught this for 1.8%. That's 18% profit with 10x leverage, guys. I think you get the point. These play out. Let's see what these waves right here were telling us. Let's zoom in a little bit. So right here, you have momentum coming down, right? And then price, let's see if price made a higher high, and you'll go from this candle all the way to this red. Oh, you want to go all the way to this red dot right here. Just make sure you're lined up on it. And then you come up to your price. That's this candle right here. So price did come up while momentum was coming down. And then you had this little move right here. Let's measure it out and see what kind of profit you could have made. Let's say you entered in on this candle, right? And then you wrote it down, got out there 0.6% profit or 6% profit with 10x leverage. Depending on the leverage you use, you could get more out of it, but be careful using high leverage, obviously. But there you go, it plays out, right? Some moves are bigger than others, but they play out. And look, right here, boom, we're on the 30-minute for XRP. You have your momentum, right? So momentum is moving down, while right here, if you come straight up, you want to go right on that red dot or the peak of the wave. You can go to the peak of the wave as well. You might get a little bit of a better entry, but as long as you're near the top, right? As long as you're near the tippy top of these waves, you should be pretty good. So you're going to go, mine's on the red dot right here. So I'm going to stay on that red dot, come straight up, right? And let's see if price made a higher high. So that's about the high there. We're going to come, right? You're looking to be in line with this next red dot, but on the price. So look at that, we made a higher high on price, we made a lower high on momentum, and look at that, you come straight down, right? That was actually a pretty decent move on the 30-minute. You could have wrote it down to say about here. That's 8%, 80% profit with 10x leverage, guys. This is huge. This is huge, super simple strategy, beginner friendly, right? You guys can watch this video and then go hit the charts and find these divergences right away. So yeah, you could just continue to come down here. I think you guys get the point. So super, super powerful, super, super easy and beginner friendly, guys. This is a great way to find profitable trades. And if you add confirmation to these, they can be golden, guys. So for example, if you're coming down to a key support level and you're already expecting a bounce and you're seeing a bullish divergence form, that's an extra layer of confirmation to give you confidence to get into the trade. You can also look for money flow or VWAP crossing over the zero line to the upside. So as you can see right here, you have your momentum is coming up, right? You can draw this diagonal line up. And then also, if you come up right here, you see the VWAP is also crossing up over the zero line, which can give you extra confirmation. Also, you had money flow starting to come up, kind of indicating that we were going to come into the green for higher prices. So this is a couple ways that you can add a little bit of confirmation. But Frankie, candles, what if I don't have market cipher B? It's really expensive. What if I don't have it? Well, just because you stuck around to this part of the video, I'm gonna show you how you can do this with a free indicator, and that is the RSI. So let's clear our chart here, click on our indicators, type in RSI, you'll see relative strength index, you'll click that, and it pops up your RSI, right? So right here, you can see on our RSI, we have a low, and then we have a higher low, making that upward diagonal line. And if you come up with your mouse, you have a low here, right? And then you have a lower low here, right? Creating that pinch point and boom, right? So it basically functions almost exactly like the market cipher B momentum waves, but you're just using the RSI instead. So let's see if we can find one more example of a divergence using the RSI. So here's another example on your momentum wave. This is a bearish divergence. You have your high here, you have your lower high right here, you get your diagonal line, right? And then if you come up, you have your high here, right? And then you have your higher high right here, right? Making that open alligator mouth that would be a bearish divergence, come straight up, boom, you come down. So it effectively works the exact same way as the market cipher B momentum waves, but you're just using the tops and bottoms of your RSI instead of the momentum waves. And this is free, guys. If you have a free account on TradingView, you can pull up your RSI, and this is all you need. As you can see, same thing applies, right? You don't always need price to be making a higher high while you're making a lower low, but you do see, right? You have a high here, you have a low here. It's signaling that you were a little closer to being oversold here, and momentum's coming down, and boom, you come right down, right? So essentially works the same way. It's just as powerful. In my opinion, it's a little clearer to see on Market Cypher B, but you can totally use the RSI completely for free and get into these profitable trades. I do like providing you guys with free versions or free strategies. So anytime I'm able to take what I'm using with Market Cypher and apply it to a free indicator so there's no barrier to entry for you to trade, then I am definitely going to point these out. So guys, I think that's all I got for today's video. I just wanted to explain to you guys what a divergence was, right? So just to recap, for a bearish divergence, you're looking for price to be making a high and then a higher high as you're making a high on your indicator and then a lower high. So you have price coming up, momentum coming down, creating that alligator mouth with your lines, and that's a bearish divergence. You can expect price to come down from there. A bullish divergence, right? You're looking for a low on your indicator and then a higher low on your indicator as price is making a low and a lower low, creating that pinch point. And that is a bullish divergence. So I hope you guys learned something. I just wanted to make this video with some actionable steps where you can just watch the video, understand the strategy, hit the charts. I suggest maybe going to TradingView and finding some bullish divergences, some bearish divergences, and seeing how they played out so you feel a little bit comfortable with them, and then use them to get into trades, right? And remember, if you see a high and a lower high on your indicator, sometimes that plays out. You don't always need price to be going in the opposite direction, but it does make it a stronger move when you do have that correlation between price moving in one direction and your indicator moving into a different direction. So go hit those charts, go find some divergences, back test it a little bit, get comfortable, and then use them to get into profitable trades and make that money. So with that being said, that's all I got. Frankie Candles out.
Here we go. At the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out.